Greetings and welcome. My name is Emily Churchill. I'm an enrolled agent here at M&M Tax Pros, and we're here today to talk about the 2018 tax reform highlights. So what I'm going to do today in this video is I'm going to run through the highlights of the new tax reform starting in 2018, and then I'm going to actually break it down for you. After I run through it twice, I'm going to break it down for you because a lot of you have been asking the same questions. So what this video hopefully will address those questions, and you'll have a clearer idea of what's actually happening for 2018. Now, I will also probably be referencing forms and schedules. The forms and schedules I'll be referencing are in reference to 2017 and back. Because 2018 is still in draft form. I think I looked on the IRS website probably about a week or two ago, and in bold letters it was like, this is still draft form. Several things have changed quite a bit, and so I thought it might be more confusing to show you a whole new form than to show you what we always have been doing and what has changed, than to show you the new form and what's moving forward. So hopefully after this video, you have a better idea of what's going on with the tax reform and can go to your personal tax preparer and ask the appropriate questions that you need to ask for your tax needs, okay? And please note that this video is for educational purposes only. This is not legal advice, this is not tax advice, this is just educational purposes for you and your tax needs. First one is it eliminates the penalty under the Affordable Care Act for failing to have health insurance. So that's a great thing, but what a lot of times a lot of people don't realize is if you don't have health insurance for 2018, there still will be a penalty on your tax return. So the actual penalty elimination doesn't actually take effect until 2019. Okay. Also, another thing to note, this new tax reform is for 2018 through 2025. And as it stands right now, after 2025, if nothing changes, then we go back to the old way of doing things, as we know right now. And throughout all of this, things could change, right? And if they do, hopefully we'll have another video up to show you that. But as I've seen it right now, from December 2017 to date, the tax reform changes are still the same for the new tax reform for 2018. Okay, so we got that. Affordable Care Act has been eliminated, but for 2018, you will still have a penalty. All right. The corporate tax rate lowers from 35% to 21%. This is mainly on C Corps, right? Because that's the corporation that's taxed at the corporate level. S Corps are a pass-through entity, and so are partnerships. So this is dealing with C corporations. Okay. It increases the refundable portion of the child tax credit to $1,400. The overall child tax credit will increase from $1,000 to $2,000. If you do have children, please take note of this because there's also the exemption that is getting repealed. So let me repeat that again because that's not on my other highlights. Increases the refundable portion of the child tax credit to $1,400. The overall child tax credit will increase from $1,000 to $2,000. Okay. Roughly the standard deduction has been doubled. So if you are a single filer, your standard deduction 2017 is $6,350. 2018, it's going to be $12,000 standard deduction. Okay. Married filing joint, your standard deduction was $12,700. It's now going to be $24,000. That's your standard deduction. Okay, and we'll get more into that later. Allows filers to write off the cost of state and local taxes. Here's the big one, but only up to $10,000. This is a lot of times why I know a lot of people heard, gotta pay your taxes before the end of 2017. If you heard that, this is where this is coming in. So before, you could take a deduction of all local taxes, right? But now with this new tax act, if you are itemizing, you can only take up to $10,000. And if you live in the state of California, New York, other states that are high in state taxes, you know that you most likely pay more than $10,000. So this is where you will see this, okay, on your new tax return in 2018. It does preserve mortgage interest deductions for homeowners, but only up to a deduction of your debt to $750,000. Once again, if you live in a state where your homes are more than $750,000, this is where you might see that. Okay. Preserves the charitable deduction, so we're okay. Charity, we're okay. All right, we're still able to take that. This is another one that's not on this one, but I want you to take note if you have this. Parents will be able to use up to $10,000 per year for 529 college savings accounts for K through 12 tuition. Okay, currently these funds can only be used for colleges, but now they can be used for K through 12. Okay, so once again, parents will be able to use up to $10,000 per tax year from the 529 college savings accounts for K through 12 tuition. Okay, the deduction for personal casualty and theft losses has been repealed. Okay, personal exemptions are repealed at all income levels. Okay, so that's when you come in to do your taxes, especially with me or any of the other tax preparers, and they've run through the tax return with you, and we've gone through either the standard deduction or the itemized deduction, and then we'll come to another deduction saying the personal exemption. Everybody gets that. It was $4,050 last year, I believe. That is now repealed. That is now no longer there. Okay, and I'll get to how this is all breaking down, but do remember your standard deduction has doubled. Okay. Biggest one, this is the big guy. This is why everybody's emailing me. Miscellaneous deductions, employee business expenses, unreimbursed employee business expenses have been repealed. So that does that mean you can no longer take unreimbursed business expenses that are towards W-2 income. Okay, that's the big one, W-2 income. This does not refer to 1099 or cash income. Doesn't refer to that. Just W-2 income. Okay, let's go through them again real quick. Okay. Oh, this is another one that wasn't on here. So the tax brackets have lowered. And the top tax bracket went from 39.6% to 37%. Okay. Personal exemptions are repealed. That's that 4,050 number I was telling you about. They have been repealed. Okay. State and local taxes have been capped at $10,000. Talked about that. Home mortgage interest from home equity loans will no longer be deductible. So that's the one thing that has changed on that home mortgage interest. But the home mortgage interest on new mortgages is only deductible up to $750,000, right? Miscellaneous itemized deductions, including unreimbursed employee business expenses, gone. No longer able to take that. Okay, and we'll get into that a little bit more. Charity contributions can be deducted at 60%. Standard deduction for joints is $24,000. For single filers, $12,000. Okay. This is another thing that is really good for the 2018 tax reform. Up to a 20% deduction of income earned by pass-through businesses such as partnerships and S-corps and a Schedule C. I know you've heard me talk about Schedule C before if you're my client for sure. 20% deduction. You just get that. And it's called a qualified business deduction, and it's 20% off your net. Okay. You're like, what does that mean? We'll walk through it. The AMT, alternative minimum tax provisions, are retained, but fewer people would be subject to that because the AMT has raised. So you will hit it when you make more, you'll hit it at a higher rate. So you won't hit it as soon. I think in the previous years, some people have hit it between $50,000 and $60,000. And AMT is something that you will talk about with your personal tax preparer. Okay. All right. So those are the tax highlights that have been that would most likely affect most of our clients here at M&M Tax Pros. Okay. So what does this mean to me and my tax return? Basically, and I'm going to just jump into the unreimbursed employee business expenses because this is what a lot of the questions have been about. And it's W-2 income. I'm going to put up some slides here. This is, remember, 2017, so you guys are hopefully able to understand it a bit better. But W-2 income goes on line 7 in 2017. And then your expenses go on line 40. So your W-2 expenses used to go on a form 2106. If you ever heard me say that, oh, it's your 2106. Your expenses would go on your 2106 for W-2 income. This would be agent commissions, right? On that W-2 income. This would be headshots, union dues, right? Any of that sort of stuff would go on 2106 connected to Schedule A, which is on line 40. That now, the unreimbursed employee business expenses is gone. Okay, so employee business expenses, unreimbursed, Schedule A, Form 2106, this is now gone. But you also need to remember the standard deduction, right, has doubled. So single filers, that's $12,000. Married filing joint, that's $24,000, right? This is how the Tax Act is right now. We're all having to, this is the first year for everybody to do their taxes. And so I think we all just need to work together with this, and we're going to try to figure this out. Now, thing to note, state returns, you can still take deductions. So a lot of times I've been telling all my clients, make sure you're keeping your expenses as you always have been, because we're still in the process of doing these returns, right? We don't start doing them until we get our software, I think, at the end of December. And we don't start doing them until beginning of February, because that's W-2s don't go out till the end of January. And so federal return, we have that standard deduction if you don't meet the standard deduction, right? If you don't have mortgage interest and state taxes and whatnot, you'll take that standard. And you could possibly still use your expenses on your state return. So make sure you're still keeping your expenses throughout this year and further on, right? Keep your expenses. Okay, but what else does that mean? 1099 cash income, you can still take your expenses. That is still the same because that goes on a different form. That is not the same as a W-2. 1099 cash income, and that is eBay, that's Amazon payments, that's Lyft, that's Postmates. Print work a lot of times, non-union work is on a 1099 a lot of times. So if you're getting that 1099 miscellaneous, no taxes have been taken out, that's going to go used to on a Schedule C. Now I believe it's called a Form 1, not sure, but it's still in draft form. But it would go on a Schedule C in the past. And you would take your gross income, say $5,000, minus your expenses, right? You can still take those expenses on 1099 and cash income. And then the net, so say like we have $5,000, right? $2,000 in expenses. So your net is $3,000. So that $3,000 would go on line 12 on the old tax form, and that's the $3,000 is what you would use to be taxed on. You're still taxed on the $3,000, but you still get a 20% QBD, qualified business deduction. So $3,000, take 20% off of that, and now you're only taxed on, what is that? Oh gosh, $1,800 or something. My math's not the best right off the bat. But just know that, right? So you can still take your expenses on 1099 cash income. Okay, that's what I'm telling people. Please keep your expenses, because a lot of times people will come to me not knowing that they have W-2 and 1099 income. And if you don't keep your expenses, we're not able to take stuff off of that 1099 income still, right? Okay, so recap, W-2 income, that is what is being repealed, right? The expenses against W-2 income. That's what's being repealed right now for 2018. Ink is still drying, just know that. 1099 miscellaneous, cash income, Schedule C's, Form 1, we're not sure. Still able to take expenses. You can still do that. And you will have a 20% QBD, qualified business deduction. And that's whether you have an LLC or not. That's just if you have cash income and you have a Schedule C or a Form 1 on that return. And so I think that's pretty much it, you guys. That's the highlights for the Tax Act reform for 2018. And I guess if you take anything from this, please know, continue to keep all your receipts, continue to keep logs, especially of your mileage and whatnot, because even though the W-2 expenses have been repealed at this point right now, right? We don't know what will happen in the future. And we also still can take, as we know right now, still take it on the state side. And we can always take it still on the 1099 side and any pass-through entities and whatnot. So I hope this gives you more information on the Tax Act, and so that you're not anxious about it like most people. I know we all are, but hopefully this will give you more information to be able to go to your personal tax preparer, right? Because each of your tax needs are individual. Like, you each have different tax needs. So hopefully from seeing this, you're able to know what you need to ask your tax preparer for 2018 and your tax return. Yeah, and once again, please note this is for educational purposes only. This is not tax advice. This is not legal advice. This is just to go through the highlights for you so that you know what's happening. And we hope to hear from you guys soon here at M&M Tax Pros. Thank you so much. Have a great day.